Lincoln Productions.
Information contained in this video is for educational purposes only. Everybody's financial situation is different, so some strategies covered in this video may not be appropriate for you. Trading in leverage products is risky and should only make up a small part of an overall investment strategy. To become a better trader, you need to take personal responsibility for any trading losses. Views of people being interviewed are not necessarily endorsed by this channel. We try to present many opposing views and let you decide. David is not a licensed financial advisor and is not trying to sell you anything. So sit back, relax, and enjoy the show.
Alright folks, so welcome back to the Short Vol Show live, and that's not entirely accurate because I am trying to sell you on Guerrilla Trades. So please check out Guerrilla Trades, link in this description. They are a great stock picking place. I'm not a good stock picker, but they are, and just one idea can definitely finance your membership for the entire year very easily. So check out Guerrilla Trades at the end of watching this, and I think you'll be interested in checking that out. Anyway, coming off of a week that was profitable for me, so I'm in in good spirits. It's been kind of a rough year, and I'm not going to go and do that warrior trading thing where I'm listing all this money numbers and patting myself on the back and all of that. But suffice to say that the plan came together this week, and I hope the best for you as well, because I am here to try to help you to develop your trading skills much more importantly than anything that I'm actually doing. In focus are the markets, and we did have a sell-off today, reaching some key levels. Next week, of course, FOMC meeting in focus. That will be, I believe the announcement should be Wednesday afternoon, probably 2 Eastern time. We are expecting the rates to be raised by Powell. I think the Fed funds is estimating a 78% chance that Powell will raise interest rates. What does that mean for the market? Does that mean the market goes up, down, or not? And there's no way to tell that. What I can tell you, though, is that we are at key levels here. If we take a look at the E-minis, we're going to see we're right on that 2600 level, and a key, of course, psychological level being that rounded 100 number level. But also, we've seen several kind of bounces off of this area. Don Kaufman was talking about this volatility box here, and breaking through this level will lead to some people at least to panic. And that should be an exciting thing if that does happen. I did go entirely to cash this week with not only my my trading account, but with my longer term funds, and the reason I did that is I just don't understand what's going on here right now as far as where our path to the upside could come. Now, as we look to the downside, of course, there's a look to the upside, and this stuff could fade and we could get a rally into the holidays. But equally likely is that we do get some violent moves down next week. And as I talked with you about in a past video, why not put a little trade on to the downside for a change? One of the reasons that I am all smiles this evening is not because of any money that I made, but because of something that I sidestepped, and that being the volatility spike. UVXY currently 66, right around 66 after the close of business, and having money on the side is great if we, I would love to be able to lay into UVXY if we spike from here. We're already sort of at an elevated level, but if we can go above 70, I would certainly be interested in putting on a longer term position. What I would look to do is, let's take a look at UVXY here. 66 right now. If we look at the chart from for a while now, we can't really expect that, before when I was looking at this chart, I was like factoring in like 5% contango for the next months. We can't factor in, I don't think, any contango right now because we could be in this kind of market that we've been in for another 6 months easily. So what that means is just I'm adjusting my strike selection when I put a short on. If we were in this sort of contango thing, then I would be looking at maybe June or even March, and I'd be looking at something like the June 40-30 put vertical. Okay, so you pay $2 for a potential, something that's potentially worth $10. However, that's still something to consider, but that seems very aggressive at this point. More likely to move the strikes up, probably 10 strikes, and put something on like the 50-40 put vertical out there in June, and just put that in your back pocket. And this, having something like this on that's farther out, you're not going to sustain huge paper losses if we spike a little bit higher. B, there's not a whole lot of decay. Now that the longer strike is much closer to, is way, way below the where we're trading now. This will exhibit a little bit of decay over time, but it's so far out that it's not noticeable. If you put this on, let's see. If you put this on, let's go for 40 times. You would have just fairly minimal decay per day. This is showing 40 times. It's showing decay per day of $34. And remember that as we move down through the strikes, that decay is going to become negligible. Meanwhile, I'm happy to be on the sidelines, and we might want to actually take a look at some sort of long either hedge for your other stuff or just a long play here. And I would look to like the very front week stuff. So I would look right now at something like the 70, 72 call vertical, something like that. 70, 72 and a half call vertical for 60 cents. It's going to let you be profitable if we do get that big pop in volatility. And then you can reverse out of that and get short from up there, and you'll have some profits to be playing with, which is always a lot of fun. All right, the title of this video says TLRY and Condors. So I just wanted to explain a trade that worked for me so far this week, and it was in TLRY, and I initiated this trade a couple days ago when TLRY was crashing. So let's see. So if we put the 5-day chart up here, so I initiated this trade this day, and I kind of missed it. I was looking, I was signaling to viewers here and here, like it's a good time to short it, and I hadn't done it. So I kind of FOMO'd this trade a little bit, but somewhere around 78, I bought the 10 days out. I bought the 77.75 put spread, put vertical in TLRY. I paid $1.10 for the 70. Stock was around 78. I paid $1.10 for the 77.75 put vertical. And then I paid $1.10 for the 70 77.75 put vertical. right after I bought the put vertical, I also sold a Jan 18, the Jan 18 80.75 call vertical. So it's essentially an iron condor across months, but once again, I'll pull up my position here so you can see sort of what I'm talking about here. So hold on. Let me see if I can put up a better chart here. All right, so TLRY in December, I bought the Jan 77.75 put vertical, and at the same time I sold the January 75.80 call vertical. So these are both bearish trades, and even though the stock had already made a run down, it continued to run further down and dropped from 78 down to 73. So it dropped about $5, at which point the day ended, and it kind of rallied back the next day, but sold off again today, and with it down back around the 72 area, I sold against that put spread I bought. I sold this 65.63 put spread. So basically, I bought a put vertical. It went my way for about $5, and then I sold a put vertical on the to the downside. And so the two trades together was a winning, very good prices to be putting on this Condor. So basically, as long as this stays between 65 and 75, I'm in good shape, and I've got 7 days left on it. Okay, in addition to that, I did sell an extra 76.78 call vertical, and then in January, and this is like 3 days after the lockout period, of which, caution, don't think it's obviously going to go lower in the lockout period, but I sold this Jan 75.80 call vertical, and I sold this 60.65 put vertical. So this is an iron condor here. Once again, I have advantageous prices because I sold this call vertical, thing went way lower, and then I sold this put vertical when it was down a lot lower. So the two trades put together have an edge in them, and we're winners against each other. And now I have this condor on in different spots. But, really small trades, but just to illustrate how to kind of execute this sort of thing. Look forward. We are right on the edge here, as I said before, with the E-minis of going way lower. And if we look, however, at the Russell has already broken lower by a bit. NASDAQ also broken lower here. And Dow broken lower. So the S&P is right on the edge. These other indices have broken lower, and we could see some real carnage next week. And feels good to be in cash on some of my bigger investment stuff, and to be not have some sort of short VIX position on, which I do for a good percentage of the time in life, it seems. So hardly can wait for Monday to come along, because this is an exciting market, and I would recommend to you to either be very small, have some cash on the side, or actually maybe investigate somehow having somewhat of a short position on, because it's kind of exciting to have stuff kind of fall apart in the market when you're actually short a little bit, as opposed to it being painful every time the market downticks. And once again, it was a fun week for me. I'd be interested in what you have to do and what's going on with you. I know I'm in the way of this chart. Let me move over a little bit. There we go. So you can see this is the Dow futures way lower. In focus next week, of course, the Fed meeting with a rate announcement on Wednesday, and that will be the end of the trading as we come into the holidays, basically. and let's finish up the year strong. I'm actually very excited to start this new year trading because it's like a clean slate P&L wise, and time to get off on the right foot, use everything we've learned, be disciplined, be small, and just put together a bunch of winning trades and keep it real tight into the next year, and hopefully put together some profitable months. That's the plan, at least. We'll see what happens going forward. This has been a great year for me as far as the channel and meeting all kinds of great new people. That's one of the best things about having a YouTube channel, is you get to meet all kinds of cool people. Especially in this business, I've met people from all kinds of different countries, and with the interviews I've done, I've developed some friendships and relationships, and the beauty of it is that we can potentially all make money together and help support our families and bring freedom and prosperity to our families and our loved ones. So, can't wait for next week to start. Thanks for hanging out in this journey with me. Anything I can do for you personally, I'm available to comment on any positions you might have for what it's worth. Maybe a new, a fresh set of eyes can always be good on a position. You can reach me on StockTwits at the famous Dave, on Twitter. My info should be down below. And I appreciate you watching and sticking with me all this time. And go try to relax, enjoy the weekend, although I know it's hard waiting for Monday to come. But Monday will come eventually, and we're looking to have a successful week. Thanks for watching, folks, and we'll see you soon.
David Lincoln Productions.
Information contained in this video is for educational purposes only. Everybody's financial situation is different, so some strategies covered in this video may not be appropriate for you. Trading in leverage products is risky and should only make up a small part of an overall investment strategy. To become a better trader, you need to take personal responsibility for any trading losses. Views of people being interviewed are not necessarily endorsed by this channel. We try to present many opposing views and let you decide. David is not a licensed financial advisor and is not trying to sell you anything. So sit back, relax, and enjoy the show.